A very warm welcome to everyone. Along with me, I have Mr. Dilip Ghorawat, our CFO, and SGA, our Investor Relation Advisors. I will begin with industry discussion first. The home textile segment is stabilizing across global markets. The intensity of destocking is reducing, and we expect improving trend of growth in the future. The GDP growth forecast across the globe has improved, and we are therefore optimistic on the increased consumption that will be witnessed in coming years. India continues to remain at a competitive advantage with presence over a complete value chain of high quality products, our skilled labor in textiles, and robust availability of raw material of all types. With increasing dominance in the US market by India, we are quite confident to continue to gain market share in these segments with a host of product offerings and acquiring new customer base. I would now like to discuss the recent positives for our sector, which in our opinion will further improve India's competitive edge in the global home textile industry. In Q3FY18, the government came out with various revisions in incentives on exports. These revisions will neutralize the impact the industry witnessed in pre-GST regime. In the recent budget, the government allocated an amount of rupees 7,148 crores for the textile sector. Out of this, rupees 2,300 crores was allocated for technology upgradation funds and rupees 2,164 crores for ROSL, which is remission of state levies. This measure showcase the importance of textile sector for the government and its commitment towards the sector growth and enhancement of India's textile trade in the global marketplace. Now, about our quarter. During the quarter, our revenue declined because of currency appreciation, revisions in government incentives, and increased in-house consumption of yarn from our spinning segment. Having found good traction and increased customer acceptability of our products in the USA, we have launched a new brand by the name of Hirelooms of India during this quarter. I am glad to share with you that our brand has been placed with a couple of retailers already. On our domestic business, we continue to perform satisfactorily. Boutique Living, our domestic brand, is now present across 445 stores plus, including multi-brand outlets and large format stores, and is now available in 96 cities across 21 states in India. At Indo Count, we will continue to play on our strength of world-class manufacturing facilities, strong customer relationship, which we have built over the last decade, the portfolio of owned and licensed brands, a proven track record, constant product innovation, and the client's high acceptability due our positioning in the mid to high segment product mix. We are confident that this will further strengthen our position in the global home textile market. During the current quarter, Indo Count Industries has been awarded by Texfossil Gold Trophy for the highest export of cotton made-ups, bed linen, bed sheets and quilts category 3 for the year 2016-17. This win is an endorsement from our customers for our commitment towards quality and services which we would continuously enhance to serve them better. This trophy is the result of hard work put in by our team and all the stakeholders over the last decade. It is also a significant milestone for us to take us to a leadership position in this category from India. Our focus in the home textile segment, backed by strong innovation skills and design capabilities, has been widely appreciated by our customers, and this trophy is a testament of this. That's it from my side. Now I would like to hand over to Mr. Dilip Ghorawat, our CFO, for the financial highlights. Over to Dilip.
Thank you, Mr. Lalpuria. Good afternoon, ladies and gentlemen, and a warm welcome to everyone present on the call. I shall now share the financial highlights for Q3FY18. We have uploaded the Q3FY18 investor presentation on the stock exchanges and company's website. We have also circulated the investor presentation to all the investors and analysts. I hope you have been able to have a look at the same. Coming to standalone financial performance for Q3FY18 and 9 months FY18. Revenues. The total revenue stood at rupees 460 crores for Q3FY18 compared to rupees 493 crores of Q2FY18. Revenue for 9 months FY18 is rupees 1,385 crores as against rupees 1,572 crores in 9 months FY17. EBITDA. The company reported an EBITDA of rupees 69 crores for Q3FY18. EBITDA margin for Q3FY18 stood at 15.1%, registering a growth of 64 bips quarter-on-quarter basis. EBITDA for 9 months FY18 is rupees 205.8 crores with an EBITDA margin of 14.9%. Profit after tax. Profit after tax for Q3FY18 is rupees 36.4 crores as against rupees 35.9 crores in Q2FY18, registering a growth of 1.4%. Profit after tax margins expanded by 63 bips to 7.9% quarter-on-quarter basis. Profit after tax for 9 months FY18 is rupees 104.3 crores with a margin of 7.5%. Cash profit. Our cash profit stood at rupees 61.7 crores for Q3FY18 as against rupees 42.1 crores for Q2FY18. Cash profit for 9 months FY18 stood at rupees 143.8 crores. EPS. We recorded an EPS of rupees 1.84 on a face value of 2 per share for Q3FY18 and rupees 5.28 for 9 months FY18. Debt. The company's net debt to equity as at 31st December 2017 was 0.26 times as against 0.44 times as at 31st December 2017. Interest coverage for 9 months FY18 was 8 times. Our finance cost has reduced nearly by 33% in Q3 FY18 to rupees 5.83 crores as compared to rupees 8.75 crores of Q2 FY18. Interest cost for 9 months FY18 was rupees 22.80 crores as compared to rupees 30.54 crores of 9 months FY17. Dividend. the Board of Directors of the company has declared an interim dividend of 0.40 per equity share, that is 20% on face value of rupees 2 per equity share for the financial year 2017-18. With this, I would request the moderator to open the forum for questions and answers. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We will take the first question from the line of Manish Oswal from Nirmal Bang. Please go ahead.
Yes, sir. Thank you for the opportunity. My question on the demand scenario in the export market, especially US market, how the inventory adjustment by our clients and the demand trend and buying orders, how do you see that thing? Whether it will improve in coming quarters or it will be remain sluggish? What are our comments on this?
See, as far as we observe, the intensity of destocking is reducing. The projections are better from the same retailers and from our customers. We are witnessing a small pickup in the demand as well. The market is stable. The US market is growing. So going forward, we expect positive trend in the coming year for both orders and demand and consumption.
Okay, sir. Thank you.
Thank you. We will take the next question from the line of Amy Truesdale from Jupiter Asset Management. Please go ahead.
Hi there. Just wanting to actually sort of follow up from the last question. We've sort of seen growth in the US start to improve, but that's been quite slow to reflect in your revenues. So just wondered if there was anything else to this, or whether it's just a matter of time before the growth comes through. Hello? Hello?
No, sorry. Hello. Can you just repeat your question, because I was not clear about the question.
Sure, yeah. Just sort of seeing US growth picking up, but growth seems to have been quite slow to pick up in terms of your revenues. We're still kind of behind where we were last year. So I'm just wondering if this is just a kind of a matter of time, or whether there is something else here that is making kind of growth not reflect very much in the revenues.
No, the revenues, as what we have reported, are reduced on account of the currency depreciation and the government incentives, and to some extent our spinning transfers. So going forward, what we expect is improvement because the currency is volatile, and whenever there is an uptick, we may hedge better rates. And from the government incentives, we see a neutral effect overall. And due to our better product mix and focus on the businesses, and our same customers reporting improved numbers and focusing on the value-added products, it will all help us grow our revenue going forward. So we are quite positive about FY19 going forward.
Thanks, that's really helpful. And just one quick other question. In terms of margins, I'm sure this sort of all works in with the factors that you have just been talking about, but is there anything else that you can say on margins?
See, we are focusing, as we have been reporting, that we are focusing on lifestyle brands and licensed brands, and we are focusing on fashion bedding, utility and institutional bedding, where we are working hard to further innovate and offer a value addition to our customers. We have a good customer base across the globe, and we are servicing them well. and we are in their good books. So we hope that we will be able to extend this to their better product mix, and this will help us to enhance our margins going forward.
Great. Thanks very much.
Thank you.
Thank you. The next question is from the line of Giriraj Daga from KM Visaria Family Trust. Please go ahead.
Yeah. Hello, Tim. A couple of questions from my side. So what was the volume during the quarter?
The volume is 14 million plus.
Okay. And we are confident of doing 30 million, what we had guided last time, 30 million in the second half. Do you think looks fairly possible?
Yes, it seems so. As how we are progressing in this quarter,
yeah,
we'll be able to report a flattish, volume as what we had guided earlier. So we will be able to achieve what we have targeted.
Sure. So what was the contribution of the fashion, utility and institution during the first 9 months?
It is similar, like 13% what we had reported. We are maintaining that. And slowly we are edging towards, because in this business, first we have to start with customers, and sooner or later they extend this, the product mix to a larger extent with how we perform.
Okay.
So we expect it to grow in the future.
Understood. So on the hedging part, my next question is, what was the realized rupee much different than what is the current average, and what is the current hedging policy?
The Indo Count is fairly well positioned to tackle any adverse arising because of currency volatility. And we have been working on our foreign currency management, where we are hedging around 65 to 70% of our projections, what we look with our customers. For FY19, we are vigilant towards the movement of the currency, and we are taking appropriate steps.
So should we fair to assume 65 to 70% is hedged at any given point of time?
Yes, please.
Okay. My next question is cotton cost. Like what we have been hearing is that after the arrival, the prices went down, but now in the last about few weeks it has started going up. So what is our position now? How much inventory we have booked, and what is our thought process there?
Basically, you see in the last quarter, it is the season which the crop comes in with larger arrivals, in the marketplace. So most of the players look forward to the season, and they do not hedge larger quantities because of the new crop. So we had also taken a similar position, and that's why in the beginning, when the prices were lower and later on it went up, it impacted a little bit also because of the quality of the cotton. So going forward, we feel that the prices of cotton will be stable, and we should average out annually on an annual basis what we had projected and guided earlier.
Just to follow up there, we were actually assuming that there would be decline compared to last year. So do you think that the decline will still be there, or we might even close just similar or flattish compared to last year in terms of cotton cost?
So some of the crop was lost because of, the pest and bollworms. So the numbers of the yield as well as the acreage were reduced. And a little bit increase on the mildews also is there, which has prompted the prices to stay a little bit higher.
Correct.
But still, we feel that, we will be able to maintain similar price levels at what we had projected earlier as compared to last year.
Okay, perfect. So thanks a lot and all the best.
Thank you. The next question is from the line of Vikram Suryavanshi from Phillip Capital. Please go ahead.
Yeah, hi, good afternoon, sir. Most of the questions got answered, but just update on this phase 2 capex, when we can really start kicking it, and where we are in terms of details.
See, the phase 2 capex is just started under progress, and we hope to complete this by March 19, as what we have reported in the press release.
Okay, and location, everything is finalized?
We are still deliberating that because of the new policy decided by the government of Maharashtra, and we have identified a place but still it has to get notified. So we are waiting for the government to notify, and as and when it gets notified, we will report to everybody. So it is under progress, and we will complete this by, say, March 2019, as what Dilip has mentioned.
And how is your view on Maharashtra textile policy which was announced? Is it in line or anything still expected from that?
No, I think it is in line, and they are trying to provide more employment by providing better incentives and support. It is still to be read in finer print, and except for power, the other areas they are trying to provide, like capital subsidy and all, in the three new areas, like Marathwada, Vidarbha and North Maharashtra, that needs to get extended to other places because we are located outside of these places. So in fact, if they extend it to all of Maharashtra, there would be some improvement. So we are representing to the government of Maharashtra on this because we are already an established player in Kolhapur. We expect them to take some positive steps towards it, and that's what we are all expecting about. So we are expecting this to improve in the time to come, and as and when it improves, we will report to everybody.
And in terms of our fashion bedding, we have been doing a lot of work and probably that will help us to grow. But when we can see really kickstart or trigger point for the revenue growth in that, because broadly we have been remained in 13% for few quarters. So when we basically can really see the revenue sticking in?
See, we had initial, already set up all fundamentals, we had set it right on the fashion bedding side, like the showroom, the designing department, the product development department, the backup for production base. So all this, and the customers are also now recognizing us as a player in this field. So having, loaded with all these tools, we hope that, in time to come, and we have few placement as well. So once this is performed well and the customer is happy, we expect in the coming years this to grow, which is in line with our expectation. So in our businesses, in customized businesses, the customer first sees how we perform initially, and thereafter he grows his market share with us. So this is how the business pattern is. And once we establish this, we expect this to grow substantially.
Okay. And last question, sir, this in-house or captive consumption of yarn, what we have, what was that broadly share, or how much currently we consume compared to earlier?
See, with the last quarter, actually, we have around consumed more than 11% from last quarter on a YOY basis. So more and more yarn will get consumed as we are modernizing our spinning, and we will keep on reporting, which we have shown in our investors deck also, how much this would impact on our revenues on an annual basis. So we are thinking about consuming more yarn going forward as we are modernizing our spinning.
Okay, so capacity at, I think that was around 20,000 spindles something?
No, we are not stating any spindlage as of such, because the entire spinning of Indo Count of around 60,000 spindle is being modernized. It's not done in part that only the spindlage is modernized. We have to set up right each and every section of the spinning, and this will help us to further consume yarn for our both sheet set and fashion bedding businesses.
Okay. Thank you, sir. Yeah.
Thank you.
Thank you. The next question is from the line of Dimple Kotak from SKS Capital. Please go ahead.
Yeah, hello sir. A couple of questions from my side. Sir, the first is, what is the cotton price per candy this quarter which we purchased, and what was it vis-a-vis last year?
It was around this 3 months, it was between 40,000 to 41,000 what we have purchased cotton.
Okay. And so last year?
It was at more or less at same levels.
And so going ahead, we expect the trend to remain the same, flat, unstable?
Yeah, it will be stable more or less on the same time.
Okay, sir. And sir, just like on a constant currency basis, what would have been your growth or decline in sales? Assuming that the rupee wouldn't have strengthened, then what would have been the sales like?
See, it would have been more or less on the Q2 trend of this Q2 FY18. What we reported, in case the dollar would have been remained same, then it would have been on those levels, except for the fluctuation, except due to the subsidies and captive consumption.
Okay, so that would be around 492 levels in a flat quarter on a YOY basis. It would have.
Yes, please.
Okay, and so just wanted to understand what is the percentage of online sales which is going up in US retailers in your segment?
See, it is improving, but today most of the consumers, they still require touch and feel. And what is being reported is that though it is improving, it is a small number, that 1.5% of the overall home textile sale. But as a company, we are keeping a close watch. We are strengthening our base by appointing a special team to cater to this business. And going forward, we also would like to focus in this area and improve our numbers, overall numbers through e-commerce sales.
Okay. And sir, this quarter has seen also a substantial fall in your gross margins. So going ahead, sir, what would be your guidance? Where do you see the margins to be?
I think the gross margins are more or less the same if you compare on Q2 FY18 basis. So we are maintaining, which is the new norm which we had reported earlier as well. So those gross margins are the same, more or less the same.
So I am comparing actually with last year.
Even last year, if you look at the gross margins, they have been impacted largely on account of the incentives and the rupee appreciation.
Okay. So going ahead, would it be safe to take this run rate for your EBITDA and gross margins?
Yeah, you can take it, but there is always an inclination to improve because we are going ahead with a lot of improvements on our product mix and offerings to the customer, and we are also trying to cater to new geographies through value-added products, and we hope that we will be able to improve this by further 100-200 basis points. So anywhere between 15 to 17 should be a logical, acceptance.
And sir, finally, are you seeing any major orders from the US retailers in the next 2 quarters?
Yeah, we always work on new client, new customers, new product mix. So always there are possibilities of adding on new clients.
Any specifics like any increase in orders from Walmart or something like that?
That we cannot say, Those customers' name and those we are not going to close.
Okay. Thank you so much, sir. That's all from my side.
Thank you. The next question is from the line of HR Gala from Finvest Advisors. Please go ahead.
Hello, sir.
Hello.
Hello.
Hello. Yeah.
Can you, sir, provide the breakup of 81.33 crore other income in 9 months?
This is mainly on account of the forex gain.
What was that?
See, this is a part of our normal forex treasury income, which is realized on export of documents.
Correct.
And where we have this is a part of our normal business activity.
Correct.
So mostly this will be covering all the dollar value what we have realized or covered up in our forward contracts.
Okay. So how much would be that value out of 81 crore?
It will be 90% will be 81 crores.
90%, 90.
Yeah.
Yeah, because what has happened, if you see that particular line, 9 months FY17, it is just 50 crore. 50 crore has become 81 crore. So that is why I just wanted to know.
So you see, it's a part of our business income. As we move forward, we are in exports.
Correct.
So we have to recognize the fact that whatever rupee conversion is there, we have to take into account and quote accordingly. So we have always maintained and reported that it's a part of our business income and strategy.
Correct.
So it should not be seen separately. It should be added up to our revenues, in fact.
So this will also include the MTM gain also?
Yes. To some extent.
Okay. Sir, second question. Prima facie, how does this Maharashtra textile policy look like?
It looks very positive because you see our government is taking positive steps towards improving unemployment. And, in order to raise employment, they are providing all support. There are 3-4 major areas where they need to further focus upon is to extend the policy to the entire state.
Correct.
And secondly, also, to give better, incentive on the power side. And all these areas they need to focus around to see that they make it further robust for entrepreneurs to enter textiles and, provide more employment in this sector. So it is positive. Overall, it is very positive.
Okay.
In
Now, sir,
Hello?
Yeah, the capital subsidy rates that now they have prescribed, are they better than what they earlier they are got?
Yeah, it has gone up. The capital subsidy has gone up. Further, if there is no spinning or there is no plant in that taluka, it will further add up.
Okay.
They have also covered the ETPs as a part of the capital subsidy.
Yeah.
So this is a really positive sign by the government of Maharashtra.
Okay.
They have also given some power rebate and subsidy of 2 rupees to the all the spinning, all the textile industry in the chain.
Okay.
So this is really a good sign for the textile plant, textile mills in India, in Maharashtra, sorry.
Okay. So overall it looks good.
Yeah, we are very positive and optimistic about it.
Okay. Any other state has come out like Maharashtra?
There are Andhra is there, Telangana is there. So Gujarat has started. Punjab is there, but Maharashtra has only given capital subsidy.
Okay.
Whereas Andhra and Gujarat, they are given interest subsidy also. So there are some key differentiation to each state to state, which will promote textile. So we feel Maharashtra government has done a good thing and they have increased the subsidy which will promote textile in Maharashtra.
Okay. So I think after studying all this, you will be taking a decision, as Mr. Lalpuria said, by March 19, which state to get into.
We will be taking as quickly as possible.
Okay.
So that we start our backward integration.
Okay.
It will be in Maharashtra only.
It will be in Maharashtra only. Okay.
Yes.
We don't want to get into another state.
As of now, today, no.
Achha. Now, sir, as far as the volumes are concerned, next year, how much growth do we expect?
See, we are expecting, fully utilize the capacity by 2021 as what we have reported. And trends look positive. We will be able to provide you some direction in Q4 results.
Okay. But will it be reasonable to assume around 10, 15, 20% type of volume growth in 19?
See, that's a wishful thinking, we always expect to grow.
Like we will be doing around 56 this year.
Yeah.
Because, to reach 90 million, then the delta will be very high you have to reach in 2 years.
So we all expect to grow from here because we are seeing positive trends.
Okay.
And as we have mentioned and we have reported earlier also, we are working hard in order to promote our new product mix in the new different categories, which are finding good acceptance with the customer.
Okay.
So at some point of time, there would be a quantum jump.
Right.
And we would expect to utilize our volumes, say by FY21, which we have informed earlier.
Okay.
Further, normally in home textile made up, one can achieve only around 90% of the capacity.
Yeah, correct.
So which is about 80 to 81.
Yeah, 80 to 81. Correct.
Yeah, so we have to go on that.
Yeah, that's true. And the last question, how do you see the progress of our domestic business?
See, we see a good traction there. Our basic aim is to, expand our brand across India in different states and different cities, which we are able to do so. We are finding good acceptance with the distributors. And our first impression is that the brand and the product, the quality which we had inclined to provide to the, being a brand being inspirational, that is being accepted. The LFS will get added from next year onwards, which we will report at the end of Q4. We are not focusing so far. So the large format stores are also being focused, and we hope to achieve success going forward there too. This will add on to good numbers.
Now, sir, we are already present in 445 stores, different mix. Now,
Correct.
Let's say each store does about an annual turnover of 1 crore, it will add substantially. Do you expect that threshold to be reached anytime soon?
No, you see, we cannot count on that. Again, it's a good thinking and a wishful thinking. But all these stores are in different cities, like 2-tier, 3-tier. So the levels of sales in each cities differ. And secondly, they sell all different category of product categories as well, like towels, curtains, bedspread. So different categories are sold. And so we expect this to grow substantially in the future. Our earlier aim is to have a good brand recall value, because our entire focus is to promote our brand, not the sales, as what we had mentioned earlier. So once we achieve that, then the sales would multiply depending upon our quality, our price level and service level.
That's right. So last question. As we have been discussing in the past, we had said that it is possible to some extent to recover the increase in the cost of raw material. So do you think anything is likely to come in Q4 or subsequent quarters?
No, come again. I didn't get your question.
We have been discussing earlier that the raw material cost variation, with some delay, we are able to recover from the customers in the next contract or in some different mode. So do you expect any recovery to come in Q4?
Not at this moment, because you see, it's quite volatile. The customer also sees that per candy, if it is 42,000 and come back to a level of 38,000, there is volatility in the marketplace. Even in the New York Stock Exchange, the A-index prices has been quite volatile. So under these conditions, as what we had reported earlier, if there is any material change by more than 10-15%, then only we are eligible to go to the customer and ask for price increase. As and when this situation arises, we are all open to go to the customer and ask for a price increase, which we will do so.
Fine. Thank you very much, sir. Wish you all
Thank you. Yeah.
Thank you. The next question is from the line of Priyanka Shah from Discovery Capital. Please go ahead.
Hello.
Hello.
Good afternoon, sir.
Yeah.
Sir, I want to understand from you that...
Priyanka, you're not audible.
Yeah.
Just turn off
Hello?
the speaker.
Hello.
Can you hear me now?
Yeah, if you can speak louder, it will help us.
Yeah. Hello?
Yeah.
Yeah. I wanted to understand from you that the sale of 16 million meters in Q4 as expected, will this be driven by any new client wins? And also the realizations have dropped significantly in the third quarter. So what are your expectations for the realizations in Q4?
No, you see, we have already mentioned about Q4. We see positive trends both in volume and value terms, and we expect on dollar terms we should be okay. But looking at the appreciation of the rupee, if it further strengthens, then the revenues are hit, which we had explained in the investor deck also. So going forward, we see positive trend, us finishing flattish in volume terms as per the target which we have mentioned earlier. And in FY19 also we see that the intensity of destocking getting reduced. There are some positive projections from the customer. We are also adding up, new customers and clients, and which are always there in new geographies which we all explore. So always we add up few new customers during the year.
Okay. And my second question is on the EBITDA margin guidance from the company for 15 to 17%. With the current realizations and assuming a sale of 16 million meters, company needs to make about 19% EBITDA margin in the fourth quarter to get a 15% for the full year.
So
are we looking at this correctly?
No. We gave guidance that somebody asked, like, will you be able to give guidelines on the EBITDA margin overall maybe next year and the future. So we gave the new norms between 15 to 17%. We never mentioned about Q4. Now, Q4, as we all see, depending upon the rupee appreciation, depending on how much yarn we transfer from our spinning, and depending upon, how we shape up the volume and the value and the product mix which gets exported, we will be able to maintain both revenue in volume terms and value terms as flattish, which we are mentioning from the day one. So, those numbers which you are calculating, I think, have got some confusion somewhere.
Okay, got it. Thank you, sir. That's
Thank you.
Thank you. The next question is from the line of Nandan Vartak from Wealth Management India. Please go ahead.
Yeah, Nandan Vartak here.
Yeah.
Sir, just could you please break up non-US and non-US business for 9-month period and corresponding period 9-month FY17?
We are doing 65 to 70% of US business, and rest is, non-US business.
Okay.
So we are maintaining that ratio. Always there is an inclination to further, grow our business in Europe, which is a larger market. But, the FTA is still to happen. So going forward, our focus will be to grow business over there as well. Plus we all add up, trying to explore new markets like Japan, Australia, South Africa, Latin America, and elsewhere. So there is always an attempt to grow the non-US business also.
Okay. And the second question was regarding Japan market. So what is the tentative size of overall home textile market in Japan?
Japan, it's a good voluminous, market, but so far they have been sourcing out of China. Now they have shifted their focus to Indonesia and Vietnam, where they have invested heavily in their textile industry. But they are also finding India as a very large market to explore and outsource. So far as the volume is concerned, India is just 2 to 3%, of their home textile market, because the sizes and the quality of the product are different. So going forward, we will focus on this market closely, and we see a good traction in the coming years, because in all these labor arbitrage suppliers like Vietnam and Indonesia, the cost is increasing, and sooner or later we will catch up with them. And since India has got a good raw material base, we will be able to make a dent into this market very soon. So that's why we have been, trying to focus in this market for the last couple of years.
Okay. That's all. Thanks.
Thank you. The next question is from the line of Amy Trusdale from Jupiter Asset Management. Please go ahead.
Hi there. Thanks for taking my follow-up question. I just wanted to ask about GST, not so much in terms of the impact of rates, but in terms of the disruption that it's caused. Did you see some of that this quarter, and do you expect to see that in coming quarters?
we are an export company. So the impact of GST going forward will be neutral and negligible, because whatever we have paid as input tax will get refund for our export business.
Sure, but I mean, is there any impact on your business in terms of operations? I mean, in terms of sourcing and have you seen any disruption given the?
So except on the demand front and the domestic business which we are exploring, we have to address that. And rest, I think for exports, it's entirely refunded.
And there is no impact on the GST on the supply side also for us.
Great, thanks.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Pankaj Kumar from Kotak Securities. Please go ahead.
Yeah, hi, good afternoon, sir.
Yeah.
Sir, my question pertains to the margin side. So, like, we are operating at 15% EBITDA margin, and you think, like, told in the presentation also, like, the incentive structure has now been gone to the pre-GST level with the GST, this all benefits and all are there, our ROSL has also been there and MEIS is there. So, would it be safe to assume that the margins, if rupee goes back to say 67 or somewhere, then we can again go back to the 20% margins that we were reporting earlier?
Yeah, we expect so, because if say there is a rupee depreciation, there would be some impact on our competitiveness, and we will be able to do better.
Okay. So this margin, 15% that we report in the current quarter, now since the rates have been gone back to the pre-GST level, so this 15% is the steady margin, assuming the rupee at 64 rupees. That's the right assumption?
To some extent, yes, but there are other factors also we have to oversee, like the cost of power and fuel, the cost of employee benefits, how you expand on product development. So all these other factors are going to affect going forward.
So because we are
baseline fundamental would be around 14-15%, but having said that, we have given an indication of 15 to 17% going forward.
So this 15 to 17% improvement would be broadly affected by the product mix rather than any other factors.
Yes.
Okay. And sir, my second question on the capex, that is phase 2 of this expansion. So you are planning to do it in Maharashtra or Andhra Pradesh?
We are planning to do it in Maharashtra.
Okay. And what would the capex size?
Around 240 crores.
Okay.
And which will be funded by a mix of internal accruals and term loan under TUP scheme and state Maharashtra scheme, so textile scheme.
Okay. And this would be broadly used for modernizing your plant or any new fresh capacity addition?
This will be part of our backward integration into weaving, adding new looms. Then further we'll be also modernizing the spinning also and some small cut and sew facilities.
Okay. Okay. And this we will complete by FY19.
Yeah, correct. We hope to complete it by that time.
Okay. Okay. And so lastly on this, that your spinning revenue. So like earlier we were having some 10% of our revenue from the spinning. So now since we are utilizing the whole yarn capacity in-house, so we would continue to do so in coming years also?
Yeah, we are trying to, as we modernize, we are trying to see how we can utilize more of our yarn going forward.
Okay. Because I remember some 2 quarters back you were talking like your spinning unit is operating at a lower capacity utilization due to modernization. So now that is completed.
Yeah, almost. It is an ongoing process because as and when we require special yarns also for our fashion bedding, we try to incorporate some more modernization in the spinning. So that is under progress. And as I mentioned, we intend to, further utilize our yarn from our spinning division. in the home textile division.
Okay. Since we are utilizing yarn facility for in-house consumption, so in ideal case, our margin should also improve because of that, because earlier we were anyway selling it outside, so that was adding to our EBITDA.
To some extent, yes.
Okay. Can we quantify that? Any number we can quote on this? How much
it is a very negligible number, that's 11, 14 crores, how much it will impact. But to some extent, you are right. It will add on to our value addition.
Okay, sir. Thank you. Thank you, sir.
Thank you. The next question is from the line of Neeraj Prakash from Nipin Capital. Please go ahead.
Yeah, hi. I just have a question regarding your capacity. So I want to know when the capacity that you added in FY17, which is about 22 million meters, when will it reflect in the depreciation expense, or is it already reflected? And the second question was in terms of competition, what kind of threat are you seeing from Bangladesh, Vietnam, and what is your stickiness with respect to your customers?
As regards to depreciation on the capacity increase, since we did it at the fag end of last year, so this year it will be on a little higher side on that depreciation front.
Okay.
On the competition side, you see Bangladesh is not at all in finer counts. It is an import-based and raw material import-based, country where they focus mainly on knitted garments. Vietnam is an upcoming country where they have labor arbitrage and they are again focusing mainly on apparel because of the earlier TPP stand. So those countries we do not have their own raw material and neither do they have own spinning in finer count yarn, are at a disadvantage. Whereas India has got an ample capacity of both cotton and fine count spinning. So to our product mix, it seems that India has got a unique advantage as compared to both Bangladesh, Vietnam and other countries. So we will always do better in this product range.
Right. Just a last question, in terms of your foreign exchange hedging, what kind of time period do you hedge for looking ahead?
It depends on the order position, the projection, the market, and we look upon how the markets seems to be going forward and how volatile they are. But normally speaking, we hedge around 65% of our forex, going forward.
Okay, thank you.
Thank you. Before we take the next question, I would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Ankit Kohli from Pure Research. Please go ahead.
Thank you. Sir, I joined in the call a little late, so please forgive if this is a repetition. And, before I share my question, I'd like to share some context. So last week in their, quarterly conference call, Welspun indicated that a major part of the destocking that is happening right now is due to pressure from the online segment. And they believe that over the past 2 years, the online segment has gone from, early single digits to almost 25-30% of the market, in the U.S., which is, seriously impacting the home textile sales. And, they feel that their revenue plans are going to get pushed because of that. Now, my question to you is, one, do you agree with that assessment of, of online contribution? And if yes, then what are the steps that we are taking to kind of counter that? And more importantly, does this mean that, that the current revenue slowdown is more structural in nature as opposed to, just a cyclical downturn which the textile industry normally sees? So my basic question is trying to understand the threat short-term and long-term from, the online segment, your assessment of it, and how well is our company placed?
Yeah, first of all, you see, every company has got their own business model, and their own view about the market, and their own set of customer, product range, and positioning. As what we have been doing is, we have positioned into the mid to high range, and we are basically supplying to major retailers directly, and also we are focusing mainly on cotton products of high-end, qualities. So every company has got their own views of how they fare their, sales and how they manage their businesses. So we do not have comment on theirs. What we have projected that we have set fundamentals right. We are established with the customers with our both product quality and services. We are here in the business for the last decade and have been serving well. We are moving up the ladder in both the product mix, new geographies, innovation, development, product development, etc. And we are investing in new technologies as we move forward so that we can cater to better product range and better product mix to the customer.
So I completely understand.
So let me complete just 1 minute.
Go ahead.
So since our business model is robust and we are focused company in bedding segment, we are perceived as a valued supplier, by the industry and by global customers. So we are well positioned. So what we would rather say is, going forward, our entire focus is how we can, we can consciously move up our value chain by adding, new products, which we have been doing for the last couple of years, by adding brands, domestic businesses, and, catering to, of course, e-commerce also and elsewhere. Now, coming to e-commerce, the e-commerce is 1.5% of the total home textile segment being sold in the USA. This has been given in various, prints and information you can get on the internet as well. Now, basically the e-commerce is affecting the other product categories of the businesses like, say, books, toys, candles, white goods, and all that. And this were easy trade for the retailers, and their sales, which used to happen earlier through brick and mortar, are being hit, which is you can find similarly in India too, whereas the retailers are losing grounds on account of product being sold in this area. In textile, particularly home textile area, there is still an inclination for touch and feel. So we are fortunate that these numbers are maintained. Of course, the retailers are affected in other areas, so the pressure is on them. But as far as home textile is concerned, the pressure is not there so much. So we have a different view that the e-commerce business is affecting so much suddenly, because if we are all as a company, and we find that other peers too are catering to this e-commerce since last 6 to 7 years, and nobody had a big traction. If we were not missing anything, we had distribution, we had product range, our price was right, we were known in the market, we had all the means to supply on the e-commerce side, but still we could not do it. So there should be some reason for that we should all agree to. So I think the e-commerce, yes, of course, we should focus on this area as one of the growing channel, which we are all doing. But as far as our company and our strategy, we find that the e-commerce is not still a big, volume business or having a big market share in the US market. That's what our view is.
Okay. Sir, in that case, what would be the biggest risk to your strategy in that case? Because, what you're saying is completely different from what we heard earlier. But, given that you're a different organization, I respect that. So what, in your view, is the biggest risk that, or a set of risks that your company would face?
See, the biggest risk always has been, the raw material. The biggest risk is always volatility in forex. Being an export company, the bigger risk is about the market having, protectionism, as what our Prime Minister just mentioned at Davos. So all these things are, are of importance. But, we being in a need-based industry, bedsheet is a need-based product, it's a textile product, and 4 countries, China, India, Pakistan and Bangladesh, they supply 85% of textile to the world. They have got raw material, they have got the base to convert the raw material into yarn and other like fabrics. So I think as a territory, we are safely, we can assume that Asia will be supplying, textiles to the developed countries as well as it will start consuming of its own. as and when it grows. So the threats still remain, but I think those threats will be overgrown by the need-based, requirement and consumption. As the lifestyle is changing, as the fashion is changing dramatically, as the requirements of the consumers are changing, the world getting much more younger in India and elsewhere, there would be ample demand for products like this to decorate their homes. So I think there would be a good demand. We are well positioned as a country. We have got raw material. We have got competitiveness in all these areas. We have been traditional suppliers for textiles over the years. We will have growth. We are investing in technology as well. So all these factors will help us to grow our business going forward. So we have to be optimistic about it.
Further, we have also indicated in the call, which you missed out, that we hope to achieve our capacity expansion by 2021, which is a testimony of our confidence in our business.
Okay, so should I read it like you don't see the competitiveness of Indo Count per se? I'm not talking about broader Indian competitiveness and Asian competitiveness, but you feel that Indo Count's competitiveness is still very much there, and you're not losing any share, and there's no threat from, apart from the cyclical factors like, currency and raw material, you feel the competitive strength is still there. Is that the right way to understand what you're saying?
Of course, some of the fundamentals which we have set right, right from the beginning of our business models and the product which we cater to, we have been able to position ourselves well. So that much only I can say. And we are quite confident of our positioning, We have been mentioning that we are a focused company. We are only focusing in textiles, only in bed linen, only in finer count bed linen. We are not going to the lower segment. All these things, we are expanding in the bedding area only, which is still a gray area, as what we had mentioned earlier, that all the 3 new categories where we have ventured into just recently 2 years back, 85% of it is still supplied by China. And as we all know that the Chinese economy is facing headwinds because of the cotton prices, because of their own exchange policies, and because of their higher own consumption. So we feel that, our company is well placed. Financially, we are a sound company. Our credit rating is good. We have a good financial health. We are a debt-free almost company. So all these factors are in our favor to develop our competitiveness going forward. And over and above, we are a customer-centric, company where we are, product-driven rather than price-driven. So this we are always focusing upon to see that we grow to a new level in the years to come.
Okay. Thank you, sir.
Thank you very much. That was the last question in queue. I now hand the conference over to the management for their closing comments.
So at Indo Count, as we said that we are confident of growing, on account of multiple levers. We are consciously moving up the value chain by adding new products, focusing on innovation, product development. We are entering new geographies. We are exploring new markets all the time. We are adding up new customers as well. We are also enhancing our focus on the fashion bedding, utility and institutional businesses, which are still a gray area. We hope that we will fully utilize our expanded capacity by the year 2021, as what we have been stressing so far. I take this opportunity to thank everyone for joining the call. I hope we have been able to address all your queries. For any further information, kindly get in touch with us or Strategic Growth Advisors, our Investor Relation Advisors. We thank all of you once again.
Thank you.